A lot of first-time buyers I talk with have already done some math in their head. They've looked at the home prices in their area, they've looked at their bank balance, and they've decided the numbers just don't really add up. And I understand why they think that. The most common assumption I hear among them is that you need a 20% down payment in order to buy a home. So on a $300,000 home, that's $60,000 sitting in a bank account before you can even start looking. Now, if that's the math that you're doing, I get it. It's a big number and it feels impossible to a lot of people. But that number, that percentage, it is a misconception. It's probably the number one, the biggest misconception among non-homeowners today. Because not only are there very common loan programs that don't require that much of a down payment, but right now there's more resources available today to help you get the money you need for a down payment than at any other point in the history of this country. By the end of this video, you're going to know what those resources look like, where they come from, and how you can find out if any of them actually work for you. All right, so if you appreciate this type of content, take a moment, go ahead and tap the like button. Now let's go ahead and get started. So before we begin talking about down payment assistance, let's dispel the myth. Most first-time buyers today don't put 20% down on the purchase of their home. The average first-time buyer in the United States puts down 9% on their first home, not 20%. On our $300,000 example home, that's $27,000, not $60,000. And that's before we start talking about the different assistance programs that are actually the topic of this video. All right, so consider this. Conforming loans, which is Fannie Mae and Freddie Mac, they only require a 3 or a 5% down payment for most first-time buyers. FHA requires just 3.5%. VA and USDA loans generally don't require any down payment at all for buyers who qualify for them. So the first place to start is with understanding that the great big obstacle standing in your way may not be nearly as big as you think it is. All right, so getting on to the different types of down payment assistance. The first thing to talk about is something that most people don't actually think about as assistance, even though it's the most common way to get help with your down payment, and that's gift funds. Now, I know what you may be thinking, it's like, great, Stan, I don't have a rich uncle, how's that going to help me? And I hear you, all right? But just hang on for a minute, because gift funds are an option, they're not the only option. Everything else in this video has nothing to do with who your relatives are or how much they have in the bank. So if the gift fund option doesn't apply to you, well, just stick with me, because what comes later probably does. All right, so for those of you who do have a family member willing to help out, maybe a parent, a grandparent, a sibling, right? Well, their gift money can go directly towards your down payment and closing costs. 39% of first-time home buyers in the U.S. use gift funds to get into their first home, nearly 4 out of 10. That number is even higher than that for younger buyers. Now, your lender is going to want a letter from your donor stating that it's a gift and not a loan. They'll also ask where the money is coming from. This is all standard paperwork. Your loan officer is going to be able to walk you through it. The definition of who actually qualifies as a family member, well, that may also differ depending upon your loan type. So make sure that you discuss that with your loan officer as well so you understand the requirements. It's a 5-minute conversation. This isn't real complicated. So the next option, and this is the one that is an eye-opener, I think, for a lot of people, government programs. Right now, there are over 2,500 homebuyer assistance programs operating in the United States. That number is at an all-time high. And the very reason those programs exist is to help first-time buyers come up with money for a down payment and closing costs. These programs exist at every level of government. Your state has one. In Pennsylvania, the Pennsylvania Housing Finance Agency, or PHFA, has programs that have helped thousands of buyers. But your county may have one. Your city may have one. These programs are funded by municipalities, nonprofits, state housing agencies, and they're just sitting there waiting for buyers who qualify to come and ask for the help. Some of these programs are grants that don't need to be repaid at all. Some are second mortgages with deferred payments, meaning no payments until something happens, like you sell the home or you refinance. Some are forgivable loans that just go away completely if you stay in the home for a certain number of years. Every state in the United States has a housing agency that runs this sort of program, If you're buying in Pennsylvania, I'd be happy to walk you through what's available. If you're buying in another state, well, a quick Google search for your state's housing agency is all it takes. And if you're working with a real estate agent, well, ask them. They probably will be able to point you in the right direction. Here's the deal. The median age of a first-time buyer in this country is 40 years old. That's a record. It's never been that high. And research shows that buying a home at 40 instead of 30 costs the average homeowner roughly $150,000 in lost equity over their lifetime. $150,000. That's not just the value of the home going up. That's all the wealth you don't get to build while you're renting and waiting to feel ready to buy. So what makes that number so frustrating after 27 years being in this business? I know that too many of those people could have bought earlier. They just didn't know that there was help that they could ask for. The last thing I want to talk about, well, there are private, non-government down payment assistance options, programs that are available nationwide through the network of approved lenders. They're not tied to any government agency. They're not restricted by location or geography. They tend to come with slightly higher rates or fees because, well, somebody has to fund them. And to be honest, they're not always the most price competitive option. But if you're a buyer who doesn't check all of the boxes for your state or local programs, they can be the difference between buying or not buying, owning or not owning. If everything else is off the table, they're worth knowing about. Here's the bottom line. 53% of renters believe they'll never be able to buy a home. More than half. And the number one reason that they give is the down payment. I've been doing this for almost 30 years. The number of people who actually can't buy is a lot smaller than the number of people who think they can't buy. My job is to help you find the resources that you need to make that happen. The link to schedule time to talk, well, it's in the description below. Let's figure out what's actually available to you. I'm Stan Brusoski. Let's talk.